Bismillahirrahmanirrahim. In the previous class, we discussed about some advantages of internal audit and internal check. We discussed about effective control, reduces the possibility of frauds, proper use of resources, then fixation of responsibility, protection of assets. If there is internal audit, assets will be protected, introduction of proper accounting system. We discussed about these. Today we are going to discuss other advantages of internal control and internal audit, internal check and internal audit. Comparative study. In internal audit, you can make comparative studies. What does comparative study means? Through internal audit, management can review its plan of progress. The figures of previous years can be compared with the current years. Growth rate can be determined keeping in view the position of competitors. Now, in internal audit or internal check, you can compare your performance with your past performance, just like you people studied horizontal analysis. If you people remind, in business finance, you study this horizontal analysis. I'm writing shortly. That is, you can compare your performance with your past performance. Like suppose 2006, 2007, and suppose this is 2008. So you can compare your current performance of 2008 with the performance of 2007 and 2006. Similarly, you can compare your performance with competitors. Suppose your company is A and your competitor is B. So you can compare your performance with your competitors. Or you set some standards. You set a budget and you are comparing your performance with the budgeted performance, that have you achieved the budgeted performance or not. You made an estimate that my sale will be this much. So you will check your performance with the budgeted performance. So in this way, you can compare your performance with your past performance. So that is internal audit and internal check. It can be used for comparative study. These are advantages of internal audit and internal check. Improvement in management. Another advantage of internal audit and internal check, the internal audit can point out the weak areas of management. It will point out, the internal auditor will point out the weak areas of management. The management can remove these weaknesses and improve. And by removing these weaknesses, when auditor informs the management about the weak points, management will look at these points and will try to improve these weaknesses or remove these weaknesses. Management can change its policies for its betterment. And this is the responsibility of management, that if auditor is giving them advice, so they will try to make changes in their policies for the betterment of the company. So another advantage of internal audit is improvement in management. Useful for external auditor. Internal auditor is also useful for external auditor. It is very useful for external auditor because the audit procedure is almost same. Both internal auditor and external auditor, they are using almost the same method. While starting the external audit, work, external audit work, internal audit report is kept in view by the auditor. So first auditor, the external auditor will look at the internal audit report and then he will start his work from there. Suggestions by the auditor. The internal auditor generally suggests the ways and means for improving the business. The management keeps in view the suggestions and acts upon to improve the business. Internal auditor, he is giving his suggestions, his views. If there are some weaknesses in the company for improvement, he will give his advices for improvement of the business. The management, when they will see these weaknesses, when the auditor pinpoints these weaknesses, and the management, they will try to improve, they will try to remove these weaknesses and improve their business. Then protection from errors. The internal audit is useful to protect the accounting records from error. He is continuously checking the accounting record, and if there is some weaknesses, so he is there and he will pinpoint these errors and mistakes. The accounting and auditing go side by side. Accountant will record the entries and auditor will check the entries. So their work goes side by side. There is no time gap and it is very difficult for any person to commit any error. If there is some error, so auditors are there, they will check and they will pinpoint the error. So the chance of error, it will be very less. Useful for division of labor. Internal audit, it is also useful for division of labor. For the division of labor, internal audit is very useful. Due to division of labor, all the staff activities can be watched very easily. It is very helpful for the internal auditors to reflect the performance of each department of the organization. So here, if there is internal audit, so he will keep an eye on the performance of each and every person, each and every department. So division of labor, it will be easy. So these were the advantages of internal audit and internal check. There is another topic, difference between internal and external auditor. In case of accounting matter, both the auditors work largely in the same field. Both in case of accounting matter, both the auditors work, internal auditors and external auditors. Largely is the same field. It is the same thing. They have common interests in finding the errors and detection of fraud. What is the work of internal auditor? Detection of errors and detection of fraud. Same is the case with external auditor. He is also there for detection of errors and frauds. Both want to know the correct and true financial statements. Both of them, they are there to find a correct and true financial statements. Following are the main differences between internal and external auditor. The first one is appointment. Internal auditor is appointed by the management of company. Who is hiring the internal auditor? The management of the company, the board of directors. External auditor is appointed by shareholders of the company. And who is appointing the external auditor? The shareholders of the company, not the management of the company. So this is the first difference between internal and external auditor. The second difference is the legal position. Legally, internal audit is not compulsory. It is not compulsory legally. In the eyes of law, if you are hiring internal auditor, it is not must. But external audit is compulsory by law. For all joint stock companies, external audit is compulsory by law. You have to hire an auditor, external auditor. There must be an audit once a year, external audit. But internal audit, it is not compulsory. That is the second difference between internal and external audit. Status of auditor. Internal auditor is an employee of the company. Who is internal auditor? He is the employee of the company. An external auditor is an independent person. And you know about external auditor, he is an independent person. So their status is also different. Status of internal auditor is he is the employee of the company, and external auditor, he is basically an independent person. Qualification. For internal audit, no specific qualification is required. There is no need of specific qualification. But for external auditor, a specific qualification is compulsory. There must be specific qualification for external auditor. Submission of report. Internal audit has no compulsion to submit report. There is no need of internal audit report, but external auditors submit reports to shareholders. It is compulsory that external auditor, he will submit a report to the shareholders. Fixation of remuneration means the payment, the salary. Internal audit remuneration is fixed by management of the company. They will, their salary will be fixed by the management of the company. External auditor remuneration is fixed by shareholders of the company. That is basically the audit fee. The previous one, it was the salary of auditor, internal auditor. But external auditor, their fee, it is set by the shareholders. Nature of checking. Basically, internal auditor checks all the transaction. He is there on daily basis. So he will check each and every transaction of the company. But external auditor may apply test, that is sample checking. He, in 1 month or in 15 days, it is impossible for external auditor to check each and every transaction. So because of this thing, he is making a sample check. Means his checking is on the base of sample. Right to attend the meetings. Internal auditor has no right to attend the annual general meeting. In annual general meeting, he has no right to attend the meeting. But external auditor, he has a right to attend the annual general meeting because he will present his report in the annual general meeting. So these were the differences between internal and external auditor. Now the next topic, it is internal control over cash, purchases and sale. How we will keep a check, internal check over cash, over purchases and over sales. The first thing is internal control over cash receipts and payment. How we will keep a check on the cash receipts and cash payments. There will be a complete procedure of internal control over cash receipts and payments. In the business, there is a greater risk of cash misappropriation. That is, someone can cheat you. So there is a need of safety measures. So what is company doing? They're keeping safety measures so nobody can cheat, nobody can misappropriate the cash. Following system may be adopted to control over cash receipts. Now first we will talk about cash receipts, then we will talk about cash payments, and then we will talk about other things. So the first measure is writing ledger. The cashier should not write the ledger. Keep in mind, cashier is responsible for payment of cash and receipt of cash. He's not responsible for writing the ledger. He's not concerned about the ledger. Who will make the ledger? There will be a separate person who will make the ledger. It should be written by other person. Cashier should not have control over the ledger. If cashier have control over the ledger, so the possibility of misappropriation, it will be high. He will just receive cash and he will just pay the cash. He will not be responsible for the ledger. Presence of officer. All incoming letters, cash related letters, should be opened under the supervision of responsible officer. There should be a responsible officer, and if there is a letter which is related to cash receipt, so he will be there and these letters will be opened in the supervision of that officer who will be responsible for the misappropriation of cash. If something happens, he will be responsible. Checks should be crossed. You know about cross check. Cross check is a check on which on the right side or the left side there are two lines drawn. This shows that this check is a cross check. So there should be, all checks should be crossed. All the checks must be crossed and noted in the diary. There is a diary of cash receipts and checks, and then delivered to the cashier. You will record these checks in the diary and then you will give it to the cashier. So he will cash it. What is the advantage of cross check? The advantage of cross check is nobody else can take the money. Only this check will be in the name of the company, so nobody else can cash this check. And if there is a diary, there will be proper record that this is check number this, check number this, check number this. So the officer, he is recording these, and then after recording, he is handing over these checks to the cashier. So the chance of fraud, the chance of misappropriation, it will be very less. So the checks should be crossed and there should be a diary in which we are recording these checks. Comparison. The cash book must be compared with the diary. I told you there should be a diary, and when we record the check in the diary, then we hand it over to the cashier. So then there will be a comparison at the end of the month of the diary and the cash book. Cash book and passbook entries should be reconciled. Issuance of receipt. A printed serially numbered receipt should be issued for the amount received. When an amount is received, so there will be a printed serially numbered receipt should be issued. So you will issue a receipt. If the cashier should issue a receipt that this much money is received. Counterfoil. What is counterfoil? Basically, if you will look at the checkbook, suppose this is a check. So with this check, there is another page, a small page. When you're taking a check, this thing is left with the book, and this thing, you're giving this thing to someone else. This thing is called counterfoil. If you will check the checkbook, you will find that there will be, on one page, there will be two parts of this one page. This part, you will take it with you if you are paying or you are receiving the payment. But this part, it will be left in the checkbook, that checkbook copy. This is called counterfoil. Now, receipts of money should be duplicate. Or simply, you can say, when you people are making payment in Salam University, so you will see that there are three copies. One is yellow copy that you people are getting, and below that yellow copy there is a carbon copy, and that carbon copy will be left with Salam. This is basically called counterfoil. This counterfoil is an evidence that money is received. So counterfoil, it is also must. Must be prepared and kept for reference. Unused receipts books must be kept safely. And those books which are unused, you will keep it safely, because there is possibility that people will misuse it. If someone find it, so he can misuse that thing. So there must be a counterfoil, the duplicate copy, and that duplicate copy will be kept for reference, that yes, Mr. A paid the cash, or cash is received from Mr. A, and unused receipts books must be kept safely. Daily deposit. All the receipts of cash and checks must be deposited on the same day or next morning. It is also important that when you are receiving cash or when you are receiving a check, so on the same day or next morning, deposit these checks or the cash into the bank. There must be a daily deposit. Use of check. For the payment, cash may not be used. Mostly big companies, for payment, they are not using cash. They are making checks. They are using checks. Always checks should be used for payment. And whenever the company wants to make payment, they are using checks. Collection of cash by agents. 3 copies of cash receipts should be prepared by the agent. If there are some agents who are collecting cash on behalf of the company, so there should be 3 copies. One should be given to the company, 1 copy they will give it to the company, second should be sent to the office, and third should be kept by the agent. You can take the example of debit card and credit card payment. In that payment, basically, debit card, credit card, you're using it in big superstores. So in that, there are 3 copies made. 1, 2, 3 are carbon copies, 3 carbon copies. This one, but it is basically 3 copies. One agent will keep with himself. The other will be given to the customer, and the third one, it will be sent to the company. So 3 carbon copies. Statement should be sent for confirmation. For the confirmation, balance statements of accounts should be sent with regular intervals to the debtors. Mostly what is company doing, that when they are making something, so they are sending it to the debtors. It will also reduce the chance of fraud. So there will be no chance of fraud. So mostly statements should be sent for confirmation. Mostly the companies, what are companies doing? They are making statements, and they are sending these statements to the debtors, just like bank reconciliation statement. When we are making bank reconciliation statement, if there is some mistake, so we are sending that statement to the bank, that bank reconciliation statement. So bank will reconcile these errors or these misbalances. Same is the case here. We are making regular statements to our debtors. So the chance of fraud and the chance of mistakes, it will be what? It will be less. So these are different measures that we will keep in mind when we are making a check on the receipts and payments. So first we discussed about receipts, that these measures, a system should be adopted to control over cash receipts. So all the ledgers, it will be in writing, and the cashier will not make the ledger. For ledger making, there will be a separate person. Cashier will just receive the cash or will just pay the cash. Presence of officer, there should be an officer who will be responsible for the receipts of cash. All the letters, all the cash, it will be opened in his supervision. Checks should be crossed, all the checks should be crossed. You will use cross checks, because cross checks, no one else except the company can cash that cross checks. Sorry. So all the checks, you will use the cross checks. Sorry. So cross checks should be used. So the chance of errors and fraud, it will be less if you will use cross check. I told you that nobody else, the company, can cash that check if it is crossed. Comparison, I told you the cash book must be compared with the diary. Just like I told you here that you will use a diary. In that diary, you will record all the checks, and at the end of the month, you will compare the diary with the cash book. Then we discussed about issuance of receipts. There will be a serially numbered receipts made, a printed serially numbered receipts should be issued for the amount received. Just like, take an example, when you are making payment for a book, or you are making payment for purchasing a laptop or mobile, so the person who is receiving the cash, he is giving you a receipt, a cash memo. Same is the case here. When you are receiving cash, so there will be two copies, just like in Salam. One is that yellow copy that you are receiving. So he's talking about these receipts, that the company should issue receipts, serially numbered receipts, to that person from whom cash is received. Just like the yellow copy in Salam University. When Salam University is receiving cash, they are giving you a yellow copy and they are keeping another copy with them. So that is what? That is a serially numbered receipt that you must issue a receipt. Counterfile, I told you about counterfile, a carbon copy. Carbon copy of the money received. So they are keeping that carbon copy with them, Salam University. Daily deposit, so when check is received or cash is received, so you will deposit that check or cash on the same day or next morning in the bank. use of check whenever you're making payment, so that payment will be made through check. When there is payment through check, so there will be a proper record of that. Collection of cash by agents. Just like I told you, if you are collecting your cash by agents like debit card, so there will be 3 copies or 1 copy, but below this there are 2 carbon copies. 1 copy will be left to the agent, 1 copy will be sent to the company, and 1 copy will be given to the customer. And the third thing is statement should be sent for confirmation. Whenever we are making some statement, that statement should be sent to the debtors, those people who are purchasing goods from the company. So there will be regular statements sent to the debtors. So the chance of errors and frauds, it will be very less. Today it is enough. Inshallah, in the next class, then we will talk about the control of cash payments, how to control the cash payments. Assalamu alaikum.